Hey everyone, how's it going? I hope you're doing well. Welcome to episode 3 of Quick Tips Season 4. In the previous 2 videos, you would have seen Mark talking about the rule of 3, about how we have the structural, corrective, or impulsive approach to the edge of structure. And then in the video prior to this one, you would have seen Benny breaking down the 3 zones. So the green zone, the amber zone, and the red zone, and how we do or do not look to trade in each of those areas. Now, building on from that, in this 3rd episode, I'm going to be talking about the traffic light system of forecasting, talking about forecasting in general, why it's so important, integral to you as a trader, and then I'll be utilizing the Falcon Trading Center and showing you how I implement my forecast from TradingView into the Falcon Trading Center and how that helps me structure my day and my week. So first of all, what I want to do is I want to talk to you about why forecasting is so important. Now, I, like many of you, used to have a 9-to-5 job. When I was learning to trade, I had a job to do. I had to keep performing at my job. I had to keep the money coming in. I had to keep the wages coming in to keep paying my rent, pay the bills, etc. Okay? I had to make sure I was best utilizing my free time, make sure that my time outside of the office was efficient and I was getting enough done so that when I was at work, I was then able to focus on my job, but not let a lot of trades go without me, and I knew exactly what I was or wasn't looking at for that particular day. Forecasting for me was the number one pillar of trading that really helped me progress very quickly. I get asked probably on a daily basis, Neil, what is the one thing that I can do to become a consistently profitable trader? Now, anyone that is a trader, has been a trader for any significant amount of time, any level of experience, will be able to tell you that there is no secret formula. There is no one thing that you can do to become consistently profitable. However, I would argue that the likelihood is that one of the most important things that you can be doing as a trader is having high quality forecasting. If you know exactly what you will and will not take, which currency pairs you are interested in, what you're not interested in, that will massively help you cut out a lot of those invalid or poor valid trades and only focus on the high quality setups that you know are congruent to your plan. Okay, what we will also be doing in this video is building on the previous 2 videos that Mark and Benny have done. So we will be talking about the rule of 3, talking about how we approach the edges of structure. Then we will also be implementing what Benny discussed with the 3 zones. Which zone are we in? Are we taking our trades in the green zone? If so, how will I then look to adjust my stop loss, or how would I then look to, what would I need to see from the market before I take this? Or am I in the amber zone? What do I need to be more patient? Do I need to hold back a little bit more? Or am I looking to take this in the red zone? If so, why am I looking to take this trade in the red zone? If you need any further clarification on any of these points, make sure you go back and watch those videos again. Really ensure that you understand exactly all of the terminology, all of the key concepts of those videos before watching this video, because they will build on each other. Okay, so now what I want to do is I want to show you exactly how I forecast using the traffic light system. Okay, so here on the charts we have Euro Yen on the daily time frame. Now, for myself, I like to do my forecasting in the evening because back when I had a 9-to-5 job, I didn't have any pressure of I need to get my forecasting done before I leave for my commute to the office and I have other things on my mind. I would do it after 10 p.m. GMT, so after the daily candle close. I would sit down. I've got no pressure ahead of me. I've got nothing else pressing that I need to get done. I can focus on my forecast. Then we would have the top 6 and the wild cards. I will be running through each of them and doing my forecast from the daily time frame down. I typically do not use the weekly time frame when I'm doing my forecasting during the week. I may look at that when it's the weekend, when the markets are closed. But during the week, Monday to Friday, I will only be really looking at the daily time frame, the 4-hour, the 1-hour, and then very occasionally the 15-minute. So here on Euro Yen, starting on the daily time frame, what you can see is we have this larger expanding pattern. I know that from what Mark has been talking about in the first video about the rule of 3, how would you say that we are approaching this edge of structure? This, in my opinion, is very corrective. There's been nothing here to tell me that this is looking like it is ready to break to the downside. At the moment, I am looking for this to reverse and I am looking for this to come to the downside. However, there's been no convincing signs from the market at the moment that this is ready to go right now. You can see that I've reined in my upper trend line because it doesn't make sense to have this chopping through price action. Okay, now let's go down to the 4-hour. and then let's expand this. Now, because I have reined in this upper trend line, you can see here that the piece of price action that we are now focusing on is this expanding pattern right here. Okay, this whole move has been corrective and moved up over the past couple of weeks and hasn't really shown any solid signs of reversing. Now we're getting an extension of the pattern. We have not completely broken above or back below. So for me right now, I've reined this in and I've just got my separate structure drawn in like so. Now I don't do my forecasting on the 4 hour because there's just too much information right there. So what I will be doing is going down to the 1 hour time frame and then doing my forecasting here. So let's expand this. What I want you to notice is how I didn't just go to the 1 hour time frame. Far too often I see newer traders doing all of their analysis, all of their forecasting, everything just on the 1 hour and even sometimes only on the 15-minute. If you do this, you are far too zoomed in. It is so integral that you are aware of what the bigger picture is telling you. Okay? If you do not know what the bigger picture is telling you, you have no idea whether you are trading structure which is going in line with the higher time frames or against the higher time frames. And believe you me, this can make a big difference to how the trade works out and how you need to be in regards to your management. Okay? So here on the 1 hour time frame, you can see that we have this 1, 2, and we're looking for a potential third touch of this expanding pattern here. We've got 1 bottom, 2 bottoms, and you could argue that we have this clear middle section like so. Now what I would like to do is just draw on this chart. So I'm going to put a ray line in here at the top like so. I know that it's looking like price action currently is impulsing to the upside, and I'm looking for this to break and give us this 1, 2, and third touch at the top here. However, I'm also aware that we could be getting an override from this ray line double top, or we may go early and we may just break to the downside. So what I want to do is I want to draw on my forecast in order of preference. Now, what I mean by that is following on from Betty's video where you have the green, the amber, and the red. I will also be using the 3 colors green, amber, and red to depict which order of preference I would like to take these trades in if they do occur. What is very, very important to mention as well is that you should only forecast entries which you would be happy to take. If you have a trading plan, if you've been trading for a little while, you've been in the Falcon community for a little while, and you have a trading plan, you need to make sure that you are only forecasting scenarios which are in your plan, which you would be happy to take. If they're not in your plan, they need to be very, very similar to what is in your plan, what is considered a go-to setup for you. There is no point you forecasting something which is completely incongruent, which is completely against how you said that you would look to trade. Okay? So you see how we're just building on this, and Mark will be touching on this in the next episode, in episode 4, where he's talking about the quality of the questions that you ask yourself before and after you take a trade. So now I'm going to get the paintbrush tool out here, and because this is I'm going to draw my favorite forecast first. And because this is my favorite forecast, what I'm going to be doing is I'm going to be drawing this in green. So here we go. So what I'm going to be looking for here is I already know that my favorite style of entry straight out of my trading plan would be a 1, 2, 3 style touch at the top with a break back down and then a flag. So what I will do is I will just draw this on here like so. I would like to see price move up to the top of structure like this. I know already that I will not be looking to take a risk entry from the top. This is my personal preference. But if you go back to episode 1, you will see that if we get here at all impulsively, then this pretty much, if we get here at all impulsively, this pretty much rules out me taking any sort of risk entry at the top. If you have any ambiguity as to why that is, go back and make sure you watch episode 1 of Quick Tips Season 4, because Mark breaks this down in great detail. Then I would like to see a retrace, preferably below this ray line. However, it is still okay to take it if we get a drop and a first flag above this ray line. Again, Mark breaks this down in the first episode of this Quick Tip Season 4, talking about how we have different weights on these retraces, whether it's above or below this point of reference here. So if I just draw this on, so what I would like to see is a drop back below here, like so, and then a first flag like this. Okay, for me, this would be my favorite style of entry. Here, I would then be able to enter with a reduced risk entry just below here. So if I just draw this on like so, a reduced risk entry, I could probably get away with if I wanted a 30 pip stop loss and have my stop loss protected by this ray line double top. That would be preferable. And then with this, I'm easily able to get over 3.3 to 1 risk to reward, and that's only to this first inflection point down here. I'm not so worried about this. Obviously, we have a much higher move. When you zoom out and you go to the daily and the 4 hour, also utilizing what Benny talked about, you can see how early on we are in the move. We do not need to have any FOMO here. So I'm not just trying to squeeze this with a 15 pip stop loss just to get the most out of it, when, you know, it's better to learn to walk before you run. So here I would be happy with a 30 pip stop loss. Now, I'm just going to get rid of the risk to reward tool. This is my first forecast. This is my preferred entry. Okay, this is what I would like to take the most. Now the second one would be, if we don't quite make it out to the edge of this structure here and we only make it to this override like so, how would I look to take this? Now I know that this is not my favorite style of entry, so I'm going to be putting this in amber. Okay, what I'm going to do is just draw this a little bit to the side and see how we get here. So if we move up at all impulsively or correctively like so towards this ray line like so, I will not be looking to take a risk entry off of this. I know through back testing, through prior experience, that taking risk entries off of ray line double tops does not work out so well for me. So I will be looking for a retrace and that first flag, very similar to what we have here on the left in green. So I'll be waiting for price action to potentially break above here. I'll be looking for this impulse back down, and I'll be looking for that first flag, either on the 15-minute or on the 1 hour chart. I don't mind. In this area, in the green area, in the green zone which we're in, which Benny covered in the video before this, you can see that in this green area, you do not need to be hanging around waiting for perfection. This is my second favorite forecast. I would prefer it if we got this one. However, I am happy to take this if we get this retrace and this push back to the downside. Now, for this third forecast, so the third forecast is my least favorite of the three that I would like to take here. However, it's still one that I believe that I would be happy to take. This is going to be going in red. So I'm going to change the color of the paintbrush to red. Now, I am not looking to take this trade in the middle of this structure. I'm only really happy to take it from the edges if we get that first impulse down, or if we clearly break below. You would have seen in some previous content that I do not like to take hovers above the lower trend line like so. These tend not to work out so well for me. So what I would like to see is a clear break below the structure and then look for that first continuation before taking this to the downside. However, you'll also notice that we need to break. It's very important that we break the lows of this flag, as I do not want to be taking this short into the lows, as we may just retrace and turn around to the upside. So I'm going to use a ray line tool here to mark on this low. I believe this to be the low of this flag. You can put it here or here. It's pretty much in the same area. I'm going to go to this wick for now. I would like to see a clear impulsive break below the low of this trend line here and below this ray line, and then look for that first continuation before I look to take this trade. So I'm going to again go to my paintbrush tool. It's in red, as this is my least preferred of these entries. I would prefer either of these ahead of this one. I would like to see a break impulsively below this ray line low here, and then I would like to see that first continuation like so. Okay, this is important to me. This doesn't confirm anything, but it gives me more clarification that price action has broken out of this and we are looking for further downside in this pair, on this pair. Okay, so these are how I utilize the traffic light system, the traffic light colors, when I'm doing my forecasting. You see how, of course, I'm talking through this in a lot more detail as I'm trying to show you guys my thought process, but this is the level of detail that you need to be having when you're doing your forecasting. Okay, we start on the daily time frame, we then go down to the 4 hour to get more of an idea of what the structure, the current price action is telling us, and then we do our forecasting on the 1 hour. Now, very occasionally, if an entry is getting closer to being ready, we then go down to the 15-minute time frame to refine our entry and look to where we can refine our stop loss placement. However, for the most part, for 90% of the time, you should be doing your forecasting on the 1 hour time frame. This is typically where we execute most of our positions. Now moving on to the second part of the video, which is the Falcon Trading Center. You can see here on the screen, we've got the Trading Center. It's broken down into the 3 different sections. So we've got plan, execute, and review. Now, obviously, our forecasting comes under the planning section. You can see here, the second one down, we have our forecasting calendar. Now, I've been putting my forecast in on the weekends. So on the weekend is typically where I go through all 28 pairs, most of them anyway, and I start on the weekly and I work my way down and I do my methodical, systematic forecasting, and that's from that I choose my top 6 and my wild cards. Then during the week, I have my top 6 and my wild cards, and I will select them and I will go through them every single day, every single evening, and pick out my favorite pairs for the next day. I will be coming back onto TradingView in a moment and showing you how I then create a separate watch list for each day so that I'm on top of the market and I'm on top of the pairs that I want to be focusing on for that day, and showing you why it's so important to do this. So what I'm going to do is I'm just going to dive into the forecasting that I put in here. So you see here, we've got our Monday forecast. We dive in here. Let's open this as a page just so we've got the full screen. And you can see here, we've got the day of the forecast, we've got the dates, and we've got the pair number, name, and the direction. So pair number 1, EuroCAD, and I'm looking for shorts here. Now look, you see these two questions here. The quality of the questions you ask yourself determines the quality of the answers that you get. And more often than not, this reflects in the quality of the trades that you do or do not take. It's very, very important that you are honest with yourself here. So here, is this a go-to setup? So what am I looking for on EuroCAD? I'm looking for a drop and a first flag. So yes, this is a go-to setup of mine. So I've ticked yes here. Now, the grade of this, is this high probability or valid? Now, if I just double click on the 4-hour time frame, what you can see here on this screenshot is that we have the 3 zones drawn in, which Benny talked about in the video previously, and I have got a move up here correctively, a head and shoulders pattern from the top of structure, an impulse down, a first flag, and a break of the neckline. Also, what you saw me cover in the Euro-Yen example was a break below the ray line lows of this, looking for that first flag. All of these positive confluence factors add up in my favor to believe that I think that this is a high probability setup. If we were further down in the amber zone or a little bit higher up above this ray line low here, I would be saying that this one is more valid rather than high probability. Now you'll also notice here that I've written some little text here. This is very, very important. I still do this to this day with my forecasting, is that I'm only looking for one type of entry here. If we do not get this drop and flag, I will hold off until another entry that fits my plan materializes. A lot of being a successful trader is as much about the trades that you do not take as it is about the trades that you do take. Okay, I can guarantee to you guys that I set quite a few entry orders throughout the week and over the course of a month that never get triggered. Okay, and there's a lot of scenarios where I'd look at the charts and I think this is okay, but it's not quite good enough for me to warrant me putting on an order. So a lot about being successful is not about just taking everything that you see. You've got to start thinking at scale. You've got to start thinking that if you were trading this with higher levels of capital, would you be happy to be putting this trade on? Now, forecasting to a high level, utilizing the rule of 3, which Mark talked about, the 3 zones, which Benny talked about, and this high level traffic light system of forecasting, this all compounds up, it all adds up together systematically before you place any trade, before you press buy or sell or put your order on. This is all a decision and thought process which you need to be going through before you take any trades. Okay, so you see here, I haven't put in my daily screenshot because this is during the week. What I would do on the weekend is I would put in a daily time frame, a 4-hour time frame, and a 1-hour time frame screenshot, just so that I have the overview of what the higher time frames all the way through are looking at. As this is during the week, it's highly unlikely that the weekly and the daily is going to change too much during the week. We need to find a process which is efficient and one that you are happy to work with and that you can sustainably do, even if you have other things such as kids, you've got family to look after, you've got a job to do, dogs to walk, etc., etc. You do not want your forecasting process to be 3 hours long every single day. As you get better and better at doing this, you become more and more efficient. You should be able to get your forecasting down on a few pairs that you're looking at to about 15 to 20 minutes or maybe half an hour at tops, okay? So no longer than that. And this is more than enough to be able to do your forecasting to a very, very high level. And there really is no excuse why you guys should not be doing your forecasting. Remember, the process determines the outcome. What you put in is often what you will get out. So here on the 4-hour, what you can see if I just double click on this and zoom in is that we can see this is what I'm looking for. I'm looking to take this trade in the green zone, so therefore I know that I would be happy to take either a 15-minute or a 1-hour flag. I'm looking for this to break back below. I'm then looking to take this down to the bottom, around about here, to the bottom of this correction where I've got this lower ray line drawn in. We've got this head and shoulders pattern. I'm looking for this impulsive break below the neckline, below that ray line, and that first continuation. Now, I haven't drawn on my exact forecast on the 4-hour because it's too much data. So I talked about this on the Euro-Yen example, but here, I'm going to double click on this, and here we have the 1-hour time frame. So you can see up here in the top left-hand corner, EuroCAD, 1 hour. Okay, this is where I've zoomed in, and this is where I'm doing my forecasting. But you see, the process is that I've started on the higher time frames, gone down to the lower time frames, and this is where I do my forecasting. Okay, I don't just jump straight to the 1 hour and do my forecasting because I don't have any idea what the higher time frames are telling me. Here you can see in more detail what I've drawn on. I've got the neckline of this head and shoulders pattern. I've written little screen grabs, little call outs here, just saying like what I'm looking at, just so that I can be reminded of these later in the day if I've had a busy day at work, or if I've been stressed about anything else, other things going on in life, that I have these little bullet point notes here just to remind me of what I'm looking for. Here you can see that I've got my forecast in green. This is the only forecast that I'm looking for. If we just move up here, I am not looking at this, and it will likely be days before this setup is then ready, and I will be coming back to the markets every single day and reassessing these forecasts and looking again to see what I am looking for that particular day. So for now, all I'm doing is focusing on this one forecast. I want this to break below here. I'm looking for that impulse, first correction, and I'm looking to take this to the downside. You can see here that I've mentioned I can place my stop loss above the ray line for extra protection, and you can see here that I've said I want to see a break below the ray line lows. This is very, very important to me. You would have heard us talking about this in a lot of content prior. You do not want to be taking reduced risk entries short into the lows, as this is often where you get tagged in and tagged out very, very quickly. You see how quick and easy and efficient this is to do. This took me a couple of minutes to put together this screenshot. I combine this with the 4 hour, got the 1 hour. This is all I need, but this gives me so much information, so much clarity about exactly what I do want to see, what I do not want to see when I'm looking to take these trades. The second trade that I've been interested in is pound dollar for a short. So trade number 2, pound dollar short. Is this a go-to setup? Yes, it is. Is this one high probability or valid? With everything stacking up around this trade, I would say that this is very, very high probability. So again, starting off on the 4 hour time frames, you see how I'm starting off in the higher time frames and working my way down. It's the same process every single time. I've got my 3 zones drawn in here. You can see here, we're right at the top of structure. This is where I'm happy to take a 1 hour or a 15-minute entry. And then I'm looking, as we move further down into the run, this is where I'd want to see more and more from the market. If we just drop down to the 1 hour time frame here, this is where I've got my more detailed forecasting drawn on. You see here we have this 1, 2, 3. Now Mark covered this structural approach in the first video, so I would be looking to see if we move back up for a third touch at the top here. You can take a risk entry from the top here. However, I know that my personal preference is to just wait for price action to turn around and give me that first impulse and correction. I've drawn on the risk entry up here just in case we get here and we get a very, very clear retracement sort of candle or a evening star formation. Then I will consider taking the risk entry, but I've mentioned that I will use a wider stop loss to use the structure as a shield. I've got this top trend line here, I've got the outer structure here, and I've got the ray line double top here as well. So 3 areas of confluence that I can use to hide my stop loss behind and use this as a shield. Like I've said here, if there is any ambiguity at all, I will wait for the drop and I'll wait for the first flag. Okay. Now, failing that, this is my preferred entry. I've got my second entry drawn on in amber, so I will wait for this to break below and give me that first correction. Again, like the setup before on EuroCAD, I want to see price action break below the ray line lows of the flag before I look for that impulse and correction. I do not want to be taking this impulse correction short into the lows, as more often than not, this will tag me in, tag me out. So you see how it's the same way of trading. It's the same process leading up to taking these trades again and again and again. I'll again be using structure as a bit of a shield for my stop loss if I can. If this makes sense at the time, this is what I will be doing. So you see this is pound dollar. It's the same process. Again, this took me only a couple of minutes to get this screenshot put together. The next one, CAD yen. So typically I have 3 pairs that I focus on for each day. I will be talking about that in the next part of this video. But pair number 3, CAD yen, again, I'm looking for a short. Is this a go-to setup of mine? Well, yeah, we have this expanding pattern here, and I'm looking for a retrace and a first flag. I would be saying that this one is high probability as well. So if we just start off on the 4 hour time frame, what you can see here, if I just expand the screenshot, is where we have this impulse down on the 4 hour. We have this larger expanding pattern here. We have this 1, 2, and we are looking for this to come up to the top, break the highs here for that third touch before taking this to the downside. Now if I go into the 1 hour time frame, you can see I've got my 3 different forecasts drawn on here. I have my favorite forecast, so you see we have this ray line double top here. I'm looking for this to break the highs, come up and touch the edge, rather like what I was talking about on Euro Yen in the first part of this video, break back below and look for that first flag with my stop loss again shielded by structure before taking this to the downside. Alternatively, if we don't quite reach the edges of structure, I'm happy to see this retrace off or around the ray line double top here. This is the override. Push to the downside and then take that first flag. I've made a note of this as well. You can see here that I've written, I would prefer the first option, need to be on the ball with the management if we do get this one, as we may push to the downside and then push a little bit higher to break this double top and come up for that third touch. So I will be looking to move to break even as soon as I can if we get this sort of entry here. Now you can see down here in red, I've got my third forecast drawn on. This is far too valid. I will not take this. I've only drawn this forecast on to show you guys what I will not be looking to take. If this was my own forecasting just for myself, I wouldn't have even bothered to draw on this red forecast, as I just know that this does not fit my plan, this is not congruent with how I like to take trades, and this is just something that I will stay well away from. We are in the middle of nowhere, we're in no man's land. I do not like to be taking this type of extremely valid, if not invalid, trade. I'll be waiting for them higher probability areas towards the edge of structure, as I know that these are sustainable, these are scalable, and I will take these trades at scale 100 times in a row if I could. All right, so you guys, you see how easy this forecasting process is and how systematic and how repetitive it is. It's the same process throughout, okay? Every single day of the week, I decide in the evening, I run through my pairs, and then the next day, in the morning, I readjust my forecasting. I run through the top 6 and the wildcards, and I'm going to pick out the pairs that I'm focusing on, and this is how, and then I readjust my forecast and I have them in my trading center. Okay, it's the same process every single day. I have a lot of clarity around what I'm looking for, what I'm not looking for, which areas I'm taking my trades in, where I want to put my stop loss. Do you see the level of questions that you ask yourself will be reflected in the quality of trades that you take? If you rush through your forecasts, do it all in 5 minutes, or even worse, if you do not do any forecasting at all, how do you know? How can you hold yourself accountable when you take a trade, when you see something on Instagram, or you see someone in the community on Slack taking a trade and you just dive in? How do you know, how can you hold yourself accountable to what you forecasted and what you actually took? And Mark will be touching on this in a lot more detail in the next video, in video 4 in this Quick Tips Season 4. So now I'm going to move on to the third and the final part of this video, which is creating a daily watch list. So now time for the third and the final part of this video, and I'm going to show you guys how I would create a daily watch list. Now it's very, very important that you have clarity about exactly which pairs you're looking at for each day and how you're looking to take each trade. Okay, so even though I am a full-time trader and I have all the time in the world to trade, I still do not look at the DXY, the top 6 and the wildcards every single day. That is simply too much information to take on board at any one time. If you factor in the fact that you may have a commute, a job, you may have family to look after, a dog to take for the walk, you've got to do the food shopping, how are you going to process all of the information from all of the different time frames on all these different pairs effectively? Clarity is the key to mastering this game. Clarity is key to helping you progress from being inconsistent towards consistency. Less is more. So what we do on TradingView, we go up here. You can see I'm in my current watch list, which is my top 6. If I just go up to the top here, and you see create new list. So I hit this, and then here I'll give my symbol name. So create my symbol list name. So here I'm going to be calling this daily. Hit save. Now you can see here we've got a new watch list. So when I look at all my different watch lists that I have, I've got one here called daily. Now you've seen me earlier today talking about my Euro Yen forecast that I've done. So Euro Yen is the first one that's going in. Then I'm going to add in a couple more. So Euro CAD is looking good, and Pound Dollar is also looking good. Now it's very, very important that you have a maximum of 3 and at an absolute stretch 4 pairs on watch for any particular day. I would argue that there is no given day of the week where there are 5 or 6 different pairs that are looking good to go. Okay, if you've done your filtering from the higher time frames down, if you've done your forecasting effectively across the different time frames, you know exactly what you're looking for, what you're not looking for. Chances are there will likely be only 1 or 2 currency pairs for each day that are looking good to go, that fit your plan. If you find that you have 5 or 6, I would say that you are not trading in accordance to your plan, and your ratio of valid to high probability trades is probably skewed too far towards the valid side of things. Okay. Now, with 3 pairs on watch, this is all I look at for any particular day. So let's say today is Monday. All I am going to be looking at when I am off at work is these 3 pairs. I'm not going to be going to my major pairs list and flicking through all 28. I'm not going to be going into my top 6 and looking at all the different wildcards. This is all I'm going to focus on. I've done my forecasting before I've gone to work. I know the 3 different ways that I would be looking to take each pair, and that's it. That's all I focus on. If nothing appears on these currency pairs throughout the course of the day, then I know that I do not need to be checking the charts. It is entirely possible to be a full-time student or to be a full-time employee and still trade effectively. More time on the screens does not equate to more profits and more consistency with trading. Okay, often it can be more detrimental than you believe, and actually it can go the other way. I have experienced this myself. I've had personal experience with having a lot of screen time too quickly and the detrimental effects that that can have on your trading. So what we do here, Euro Yen, you can see here, I know what I'm looking for. For me, I want to set an alert just so that I'm aware of when we get to this ray line double top, because then when we get here, I know whether we're going to get hit impulsively, break through looking for the outer structure, or whether we're going to be pushing back down to the downside. So you'll see here, I'm now going to show you how to set alerts. So if I just go over to the right-hand side here, just under my watch list, you can see here on the second tab, we have alerts. If I click on this one and click create alert, now look, I've got the pair, I'm looking for this to cross, and I'm looking for price action to reach this ray line around here before I get my alert. I'm not going to put the alert on the ray line because I want to see what we're doing around this area, so I'm going to put it a little bit below. So I'm going to go for 125,500. So you see here, the value equals the price. I've got 125,500. This will now show me a pop-up as well, and it will make a sound, and I will get this message here, okay? You can also change the message as well to, for example, if I put this on, check ray line, override. And then I hit create. Now you see here, if we just wait a second, this should pop up in yellow. Okay, so price action is currently here around 125,157. If we push up towards this area here, I will be given an alert. You can set this up so that the notification comes through on your phone. So let's say you are at work or you are at school, you will get a buzz on your phone and you will know that you are then able to go. When you have 5 minutes, you're able to go and check the charts if you're on your lunch break, or you can pop out of the meeting room, or you can even go to the bathroom to, trade from the toilet if you need to. I've done this myself. It's just part of the parcel. That's what you have to do in the early stages of being a trader. You notice how I haven't put the alert on the ray line. I want to give myself enough time, even though I'm looking for this to retrace from this ray line. I'm still waiting for this to push back down and then create a hover. So I know that I likely have at least an hour. If this alert gets set off, I have probably 90 minutes, maybe even 2 hours before this trade is ready to go. Okay, so if this alert gets set off, then I'm happy to look for this one. Now, also on the flip side, if price action breaks to the downside here, I want to know that we are breaking this, and I know that I'm looking for this to break to the downside and create that first correction before looking to take this trade. Because I know I'm not looking to take the trade in this area, if I just draw this on in white, I'm not looking to take the trade here at the bottom of the correction or above this ray line. I do not need to set my alert in this area. So what I'm going to be doing is setting my alert below this ray line. So what's the price here? 123.9 would be a good place to set the alert. So what I do is I go up here, I click on the alert on the alarm clock here, set alert, Euro Yen crossing 123.900. So if I just do this, 123.900, okay, and then check, you can put this alert here, check breaking lows, and then hit create. Now you see it's going to go amber, and now my alert is set. You notice that I haven't put the alert right on where I want to be taking the trade. I've given myself a little bit of breathing room, a little bit of time to react. The reason why I haven't set a third alert up here for the top here is because if we break this alert here impulsively, it's likely that we may be coming all the way up to the outside here. So if this is the case, then I can set a fresh alert, set a new alert around about this area, around 125.8, just so that I have enough time to see if we are pushing up towards this edge of structure. But again, I will have plenty of time to wait for this to impulse back down and look for that first correction. So you see here, guys, even with a full-time job, even as a full-time student, if we are productive, if we are proactive with how we set our mornings and evenings up and how we know what we're looking for on the charts ahead of time, and we have clarity, then there is no excuse. There is no reason why we need to be missing lots and lots of trades. Everyone can find the time in their day to be doing high-level forecasting. Okay, you may not be able to start on the weekly and work your way down every single day, and I don't believe that you need to. I think that is only really saved for the weekends. But every single day, whether it be in the morning or in the evening, you should be doing forecasting to this sort of degree of detail. Okay, if you want this bad enough, you will make time for this. When I had a 9-to-5 job, did this mean that I had to get up a little bit earlier or stay up a little bit later from time to time to get this done? Yes, of course it did. If you want this bad enough, if you're doing this for the right reasons, you will make the time. I now believe that in conjunction with the mentorship you have here, with the Falcon Trading Center and this Quick Tip Season 4, there is no excuse now for not being able to do this. You see how we've built these videos, these episodes on top of each other. Starting off with the rule of 3, you know how we're approaching the edge of structure. Then following on with Benny's video of the 3 zones, we know which area we're in and how we will or will not look to take these trades. And now this video, where we're talking about how exactly I will forecast and how exactly I will look to take each trade, how I've set up my alerts for each day, how I've got my daily watch list as well, so I'm only focusing on a few pairs. I'm not spreading my attention too thin across 10, 12, 15 different currency pairs every single day. And then in the final video, Mark is going to be breaking down in a lot of detail about the pre and post trade checklist and questions that you need to be asking yourself. So guys, I hope you found this video beneficial, and we hope you enjoyed the 4th and final episode in this series. And thanks a lot, guys. That's all from me.